Okay, welcome everyone. Late day video for me. I had some things go on, some personal issues that I needed to take care of yesterday and then today. So we'll get this video out. We're going to cover the stock market technical analysis, and I'm going to show you guys what I'm seeing. There's some interesting things. So just take a step back and think about how everyone feels right now. Everyone's extremely bullish. Let's just understand that. There's a lot of bullish momentum. There's a lot of bullish sentiment, essentially. If you look at the put-call ratio, you'll see that we're at really extreme call buying. And so understand that is really the environment that you're in. We're very tilted to the bullish side. So now let's look at these charts and see what we have going on. The first thing I think that is really comes to mind is the IWM. Let's look at the Russell 2000. So here's the RTY, the Russell futures, and you can see that we basically had this bearish rising wedge right here. We had a breakdown right there during the holidays. Then we really officially broke down, and we're getting this really rampant kickback rally today, where they're ramping it back up into this wedge area. Now this is resistance. You know, this should hold. I think the momentum has carried us into this wedge, but I think there's a high probability that we sell off and close below this wedge. And basically, this is a back test is what I'm looking at it as. Looking at the IWM, you can see here that's already started to play out. So the IWM, you have this bearish rising wedge right here. You broke down and we did this full back test right now. We're getting rejected and selling off impulsively. And that's when I started to notice it just a few minutes ago. That's when I started this video. So I expect this will continue. The other thing on the Russell is we had no bearish divergence. Let's go ahead and remove this. So previously on the daily chart, there was no bearish divergence. I kept pointing that out, that the Russell looks bullish. There's no bearish divergence, no negative divergence on the daily chart. And so until that shows up, it's hard to make a bearish case on the Russell. Well, we do have that bearish divergence now. So you can see here, if we continue to sell off from here, then this RSI is going to turn down, and that's going to be your bearish divergence basically. So what do I mean? Well, you can see here we made a new lower high on the RSI, and price ramped right up into this resistance area. So new higher high in price, lower high in momentum, indicating that this is negative divergence. So I'm looking at this as a backtest of this broken trend line, and I'm now expecting that we probably sell off in the Russell. So I took a short position here in the Russell just a few minutes ago, right up here at this resistance, because we're starting to reject. I also, so again, there's a gap. I think we're likely to come down to fill this gap right there, probably get a reaction right there, but that's a ways down from where we're at. I mean, the Russell was up 5% or something. It was a huge up day on the Russell. So even from where we're at down to the gap is another 3.5%. Pretty good size move in the IWM. So looking for that to continue. So again, look for signs that it is going to continue. Look for more selling. Look for the RSI to turn down on the daily chart right here. Look for the RSI to kind of turn down, giving you that negative divergence. And again, usually the best opportunities to enter a short is when everything looks extremely bullish. And that's what it looks like. You know, the Russell's up 5%, shorting right up here at resistance while putting in negative divergence. That's the key area where you want to short. You want to short at the top and you want to buy at the low. It's really hard to catch the very top and it's very hard to catch the very low. But again, we want to look for signs of things topping out to take shorts. And if we get that that RSI turning down, that's going to give us a sign that we're potentially kind of at the top, where we're running right into resistance and getting rejected. Look at the dollar here. You'll see the dollar ran up right into resistance right there, kind of rolling out. This is that trend line that I've had marked out. Seems to be holding true. And you got this trend line. We ran up, hit it, got rejected. Now let's see where we go from here, because I kind of have a feeling that we're going to actually stop about where we're at right now and turn up and break this trend line. I'm looking for that. I think that's what's going to happen. Why do I see that? Well, if you look at the dollar, we've had bullish divergence in the dollar on the daily chart. It's still there, still intact. And yesterday was a divergent low. So the momentum is telling me that the dollar is likely to break higher. We don't have the breakout yet. So look for that breakout on that trend line for a buy signal. But again, I think there's a high probability that we do it. That's just my gut feeling on this. Obviously, we could go lower and run back down to the low, even make a move all the way down to the below 89. 89 is major support, so I could see it going either way. I'm not taking a trade based on where we're at right now. I'm just trying to give you guys what my gut feeling is telling me. But yeah, we could run down to 89, undercut 89 slightly, and then turn up, or we could turn up here. I just have a feeling with the charts that I'm seeing on the other markets that there's a relatively good probability that the dollar turns higher here. Let's look at the Qs. All right, so here's the trend line that I have, 310.97. We made this bearish flag today, broke down this morning, but then they ramped it up, and then we're selling it off into the close. So we'll see where this thing heads. But again, we're still holding this trend line. We're still holding resistance around this 311 area. And so as long as we hold that, I think we continue to work our way lower. A break below the previous lows down here, I think they were on Monday, down around 305. That should be pretty bearish if you can, if we break down. And if we do that, I'd look for this 298 level next up for support. All right, VIX. I'm buying VIX down here. I sold some VIX yesterday on that spike. And then on the pullback today, I'm buying some more VIX. And I actually bought a little bit more than I normally would, but I really like the VIX down here. I think we're going to get a volatility spike. You see on the hourly chart, we've got bullish divergence. If I just kind of adjust this down to here, bullish divergence on the hourly chart. You look at the daily, bullish divergence there on the daily. So momentum is moving higher in the VIX, even though this UVXY has been moving slightly lower. Another way to chart this is VXX. Again, same deal, bullish divergence there. You can see it in the short term. We've got it right there. And the VIX has just really been holding in this area. So there is put buying going on. Even though the market feels extremely bullish, people are buying protection. And I think there's a setup here for a pretty good spike in the VIX. This is the one I'm buying is VXX, but for the most part, I think it's very similar to UVXY. Again, what I'm looking for, we've got this downtrend line right here. If we get some sort of impulsive move, I think we're going to break this trend line and run up and tag, say, 31.97, 32, something like that. So looking for about a double in this volatility in this instrument here, a VXX. From about 17, I think we could easily hit this 32, maybe even higher, but 32 would be a profit target. And then we've got another level up here at 42. So both of those I think are completely possible if we get some sort of a spike in volatility. Let's look at long-term Treasury bonds. Interesting action in this one today, down 2.33%. That's a pretty big move in TLT in one day. I haven't seen a move that big for a while. So that's catching a lot of people off guard. Obviously, the bonds, looking at my daily chart, we've had bullish divergence, and it's still there, actually. You can see here we're making kind of an equal low. It's actually, if I zoom in, you can see it's actually slightly higher, the low. And bonds, so we're at another divergent low. Now, if bonds turn up here, that's going to keep this bullish divergence intact. If we see more selling, we're going to burn through this bullish divergence, and it's going to be, that's pretty bearish when you have divergence and you burn through it. That's pretty bearish price action. So could go either way. I don't have a position in this. I'm gonna play. I use it. I read this and use it to help me understand where potentially markets are going. This tells me right now that there is, markets are not protecting themselves with bonds, and it's kind of risk on. And that's what the charts in the QQQ and the IWM especially are telling us as well. So does that continue, or do we reverse here? We have yet to see, but again, still have that bullish divergence there. So look for it to either get burned through or to remain intact. If it remains intact, then this is likely a stop rate, and we're going to see a pretty good size move to the upside in bonds. And that would correlate pretty cleanly with a sell-off in the markets. I'll flip to my trading platform, Lightspeed. You can see here's the VXX. You can see I loaded up right down here. And what I saw, really it was the IWM that triggered me to it. Here's the IWM, and basically I saw us starting to get rejected right in here, and impulsive selling come in. See the volume starting to pick up. So they're clearly dumping, this rally. They're selling into it right now, into the close. So this, to me, it seems like it's likely that we just saw a near-term top in the IWM with that negative divergence that's now intact, and with running right into resistance. This was major resistance right up here. So they ran it right into there. Now they're selling it off. You can see the Qs doing the same thing, selling off. It's impulsive too, relatively impulsive. So when I started to see that, the volatility looked good, and we're continuing to move higher. So I'm looking for, a bigger move here in volatility. Not necessarily today. There might be some continuation over the next few days on this one. I want to take a minute and point out the FAANGs. The FAANGs across the board are weak, and that is something that I think should be a concern to anybody. Here's the S&P 500 heat map, and you can see that, the market is pretty broad rally across the board on the S&P 500, lots of different sectors, except the market leaders. Close that. The market leaders are all being sold into, and that is a concern. Usually in a bull rally, if the leaders aren't participating and the leaders are selling off, you usually see the weakness take, the ends of a rally can often take place in the other kind of weaker sectors. This could just be rotation, and that, I guess, in general, I can't say that this is just weak across the board. I would say this is more rotation, but understand that the market, the large cap tech, they have such a heavy weighting in the stock market that unless you see days like this where the entire market is rallying, if the FAANGs are selling off like this, you need the entire market to rally in order to keep the indices up. So this is, not good positive action that you'd want to see. Usually you'd want to see the FAANGs participating with the rest of the market. That's strength. But, if you get any kind of weakness in any other sectors, and the FAANGs are selling off, the markets are going down. So keep an eye on that. Rolling back to the FAANGs, you can see Apple also on the daily starting to break this trend line. Here's the hourly right here. We're just walking up this. We're starting to break down right now. So if we close down here and get that daily close, that's going to be a breakdown in Apple. And without Apple, it's really hard for the markets to stay propped up. Microsoft's just been trading sideways, so I don't see too much that I can really point out in Microsoft. We're just, looks like we're going lower in Microsoft, but again, it's a big sideways range. So we could obviously head down to the bottom end of this range down here at around 200. Amazon, same deal, sideways range. Looks like we're just heading lower, probably heading down to the bottom of the range. And Google still within kind of a bearish rising wedge pattern. Nothing going on that's too interesting there in Google. Let's take a quick look at the financials. Financials are rallying pretty strongly today. I'm obviously underwater on this Citi short. I'm still holding it, and I'll explain the reasons here shortly. But keep in mind, so XLF, watch TLT to give you signs on XLF. The long-term Treasury bonds, if they're selling off, that means the long bond interest rates are rising, and the Fed's keeping the short end of the curve pinned at zero. And so you're getting a steepening of the yield curve. That's basically what's happening. Steepening of the yield curve is good for banks. And it's typically bad for tech, though. So good for banks, bad for tech. That's kind of what's going on, I think, today around the Treasury bonds. And that's why these financials are rallying. Is this a false break? It is a breakout right now on XLF. You can see here, this is your going back to 2011 back here, lots of reactions, and we do have a breakout, but I suspect that this is kind of the stop rate, and we're going to get faded. This is kind of the ending move. So what am I looking for in Citi? Right now, I am, it's a breakout, obviously, above this level. I talked about the potential for a pop, and I said I expect it. So there it is. And I'm looking for Citi to not go much beyond this. I'm looking for, we might hold up here for a few days, maybe make a slightly new marginal high. Nothing much though. I'm looking for it to stop in this area. If it doesn't stop in this area, continues to run higher, I'm going to stop out above 68.81. A daily close up above there, and I'll probably look to stop out on this thing. So again, it's all about keeping your entries and your risk short. Or small. I got short right here. And if we get stopped out, yeah, it's a 10, 11% move. But relative to the risk reward, it's acceptable because I think that Citi has the potential to move all the way down here to this 43.49, which is a move of about 30%. So it's a 3-to-1 risk reward ratio. That's acceptable to me. You got to give these things some room and understand, I'm always looking for a favorable risk reward ratio. I'll risk 10% loss for a 30% gain. All right. So that's kind of what this trade's about. And I'm looking for, right now I'm looking for this price action to really not go much higher. So keep an eye on that. If you're in this trade, that's what I'm looking for personally. Okay. And wrapping up, you can see volatility is continuing to ramp higher. So again, look for this to continue. I kind of pointed out what I'm looking at in the general markets. Doesn't mean it's going to play out, but that's what I see happening right now. So I'm looking, just to summarize, I'm looking for the stock, I'm looking for IWM small caps to start selling off. Excuse me about that. So looking for those to start to sell off. Tech should start to sell off as the yield curve is starting to steepen. Financials could go higher, so I'm going to admit that. I'm not exactly sure on that, and that's why positioning is important. I don't take a full trade and load all into the financials. It's all about kind of having a balanced trading strategy. And when you see a trade that you like, you want to still take a, kind of an even amount to other trades as well, so that if you're wrong on one, it doesn't wipe you out. And then the other thing that I'm looking for is, I think gold could probably sell off a little more because if the dollar rises, the gold could sell off. Although, honestly, I'm not quite sure on gold because the chart on gold still looks bullish. And I think that if you could see a safe haven trade where people rush the gold and the dollar at the same time. So, again, I'm a little, I'm not sure on that one. I still like bear gold. I'm holding that position long. It still looks good. And volatility is obviously spiking. So, all right, guys, I'm going to get this out so that you have at least some time to kind of look at the charts yourself. And again, everything in this video is just my own opinion. Nothing's trading advice. These are just ideas that I see. And so I'll get this video out and catch you guys on the next one.